Memory chip stocks just went absolutely parabolic. And somewhere, someone is thinking, this has to be the top. So what if you started shorting them right now? Let's run the thought experiment. This is not advice. First, the bad news for bears. Micron is up about 760% in a year. SK Hynix blew past a $1 trillion valuation. These aren't stumbling, they're sprinting. The AI boom created the worst memory shortage in 15 years. The good stuff is sold out through 2026. Micron just posted record revenue, 85% margins, and $100 billion in locked-in contracts. And Wall Street is still raising price targets. Shorting this is like stepping in front of a freight train. But here's why bears are tempted. Memory is the most cyclical business in all of tech. It always booms, then busts. A new chip factory costs $20 billion and takes years, so everyone overbuilds at the top. Right now, they're spending over $75 billion a year on capacity. Bears say that seeds an oversupply glut around 2027. Meanwhile, China's chip makers are ramping fast, flooding the market with cheap memory. A price war could follow. And the scary part, in this business, record earnings often mean you're standing right at the peak. These stocks look cheap at the top, a tiny price-to-earnings ratio, because the market knows profits are about to fall. In 2018, Micron fell 56%, while it was still posting near-record profits. In 2022, it dropped 50% and swung to billion-dollar losses. The bust is always brutal. And the stock usually tops a couple quarters before the numbers do. By the time it's obvious, you've missed it. Now the danger. When you short, your loss is unlimited. A stock can keep going up forever. If it rises against you, you get a margin call, and you can be forced out at the worst possible moment. And if too many people short the same thing, a short squeeze can send it rocketing even higher. The number one killer? Being right, but early. The market can stay irrational longer than you can stay solvent. So shorting a cyclical at the top is the hardest trade on Wall Street. You can nail the idea and still lose. Okay, but say you did want to trade an idea like this, long or short. Where do you even do it? This is where Apex comes in, a self-custody exchange built for exactly this. Markets like these are tradable around the clock, 24/7, with no KYC sign-up hassle. And using the link below, you get 30% off trading fees. It's in the description and pinned comment. Your keys, your coins. You stay in control of your funds the whole time. So should you short memory stocks? That's not for me to say. Just respect the risk and never bet what you can't lose. Educational only, not financial advice. Links below for 30% off on Apex. Thanks for watching. If this helped it make sense, do me a favor. Drop a like, share it with someone who needs it, and subscribe. New market breakdown every week.